Hello and welcome to the stock market analysis. Well, the S&P 500, this is the SPY, gap down a bit today, but it's still in the 20 MA and 50 MA zone. So what we do not want to see is for the SPY to drop below the 50 MA. Let's take a look at the S&P 500 futures. Well, we have a slightly down day today, and you can see the sell-off right at the here about this bar, and it's just meandering sideways at this moment. So it's quite normal for the stock to decline a bit as it rises. That this S&P 500 has been rising for quite a long time, but again, what we do not want to see is for it to drop below the 50 MA. You can see since here it has not dropped below the 50 MA, so this is a support area and you do not want to see it drop below this 50 MA. So at this moment it's still okay, the trend is still alright. There's no weaknesses at this moment, but you want to be careful and watch the 50 MA. Now, if we look at the diamonds, it is already below the 50 MA, something that is not good. You can see that there was a bearish cross in the 60-minute chart, and now it's trading below this level, this support level. It actually gapped down today, and that is something not very good, right? Because I think maybe Apple is dragging it down. So if it's below the 50 MA, it's break this support level, there might be a possibility that it might decline to this support area. So there are a bit of weaknesses in the Dow Jones, the diamonds. If we look at the Dow Jones industrial average, yeah, we can see it's almost the same. It's below the 50 MA. That is something not very good, something that I do not like. Now, the QQQs are also challenging the 50 MA, something that we do not want to see. And if there is a bearish cross here, then there is a possibility that might be weaknesses in April for tech stocks. Now, you can see that the Qs is dropping below this trend line, and already there's a bearish cross in the 60-minute chart. It's below the 60-minute 200 MA. So you want to be really careful, because if this support does not hold in the 60-minute chart, there's a possibility that the Qs will be going down south to about this area. So you can see it's below the daily trying to go below the 50 MA, and if it continues to drop, right, we might see it drop to this area in the daily chart. So some pockets of weaknesses in Dow and also the Nasdaq, the QQQ. Now semis are still alright. It's just trading sideways here. We can actually draw a sideways trading here, and it's still be above the 50 MA, so still quite safe, but you do not want to see it drop below the 50 MA. And this consolidation, if it drops below this support level, it might just meet the 50 MA. Now the tech sector is not looking very well. You can see that it's like a rounded thing and kind of like rounded top. Yeah, maybe it looks like around the top, and it's breaking below the 50 MA, already below it. And if you go to the 60-minute chart, you can see already a bearish cross below the 200 MA. 20 MA is below 50 MA. 50 MA is below the 200 MA. And well, you can draw a trend line here. It's dropping, and if this support area does not hold, we can see techs dropping to about here. Okay. Now, some things to look out are like Apple. Apple has been in a bearish trend since around here with where it dropped below the 200 MA. There was a bearish cross, and you can see that it's below the declining 20 MA, declining 50 MA, and the 200 MA is sloping down, and this will affect the markets because Apple is a big component of the Nasdaq, the QQQs, the Dow Jones, and also S&P 500. So this is an area of support you want to look at. It is an area of support. It tries to find a support, and if it drops below this area, we can see it reaching this support area here. There's a possibility that it might reach this support area here. So something for you to look at. Always look at Apple when you analyze the S&P 500. What I really don't like is in a bearish mode right now. You can see the MA is slanting down. The faster MA is below the slower MA. So all these are bearish things that you do not want to see in a stock. All right. If we can find support here and go back up, then yeah, it's going to be good for the market, it's good for the stock. But you know, if it drops below this support area, you need to be very, very careful about it. Now let's take a look at IWM. IWM is gapping down today, broke below this uptrend line, something that is not good. And it's already below the 50 MA, and if this support does not hold this area, you might see it dropping to the 50 MA. So these are pockets and signs of weaknesses. Let me just show you the divergences in IWM, if there is any. All right, just a slight divergence. Okay, you can see that the MACD lines here is higher, here is lower, and we see the top here is higher, here is lower. So a slight divergence. All right. So something that is not very good, and you don't want to see it in any index or stock. So this is the gold futures. Gold is moving higher. This is daily chart. It broke out of this consolidation here, breakout of this flag pattern as well, which you can actually buy, put a stop loss and ride it higher. It's still in a nice uptrend. You want to be bullish on gold if it's still above the daily 20 MA. And if you want to be more accurate, you want to look at the 60-minute 200 MA. If it's still above it, then you stay bullish. You can see that since this kind of bullish cross here, it has been staying above the 200 MA, and you want to be bullish on gold if it continues to rise. Now let's take a look at crude oil. There are a lot of S&P 500 stocks that are influenced by crude oil. Rate is still in an uptrend, making higher highs and higher lows. Still above the 20 MA, although some weaknesses here. Not surprised, because this area are areas of resistance, and it needs time to be absorbed. There's resistance here, there is resistance here, so don't expect a smooth right up like, you know, last month what NVDA did. But you can look at this area here where there is support here, and this will be a good support area, although it's correcting. If it can meet the 20 MA and find support, this area is a viable dip, and many oil stocks might be moving up if the support holds. A 60-minute chart shows that it is dropping below the 60-minute 200 MA, and this is not a good time to be long oil at this moment. In the short term, you want to see it break above the downtrend line, going back above the 20 MA and 50 MA. So maybe it might correct a bit and then rise. Let me take a look at some stocks like AMD. This is the what do I call it? The tech stocks and semi stocks. Well, there's a nasty red bar here, and this was actually support area. The reason why the 50 MA did not hold is because it declined in such a curved way. It should be declining gently, and we can draw a downtrend line, but there's no downtrend line we can draw. That's why it's decline here and eat into this support area at the very low end of this support area. And if this support area does not hold, there might be a breakdown. There's already a bearish cross, and the breakdown will send it lower to the 200 MA, and this will affect a lot of semi stocks, as people know that AMD is declining. NVDA is one that is still holding strong. That was a double top pattern, but this support area is still holding. All right, and if it continues to hold, we can just treat it as sideways trading. But if it drops below this support area and the 50 MA, something not very good, and that's not something you want to see, because when it drops below the 50 MA, there's a possibility there might be a decline to the 200 MA. Anything we want to look at? Mid caps. Okay, mid caps are also not very good at this moment. It has broken below 20 MA. Since here it has not broken below, it's still above the uptrend line, staying above the 50 MA. So just a bit of a sign that there might be weaknesses in the mid caps, but no big concerns of a decline yet unless it drops below the 50 MA. Weekly wise is still strong, in a strong uptrend, and you want to continue to be bullish on mid caps as long as this old support holds. This previous high is a new support, is still trading above it. So maybe if it declines to this area, it might be a very nice buyable dip for mid cap stock. XLF is also below the 20 MA, something I do not like to see. It's like it's making a head and shoulders top in the 60-minute chart. This is the head and shoulders. Okay, let me just draw for you to see. Very interesting to look at the stock market every day. And if you like the journey, do watch my analysis. I try to do it every day. So this is like head and shoulders or triple top or whatever. There's already a bearish cross below the 200 MA. That's something not very good, and it is already below the support area. So things might not look good for the financial sector unless it goes back above the 200 MA and 50 MA in the 60-minute chart. So that's all for today. Hope that this analysis has been helpful to you, and I'll see you in the next one.